Welcome back. We have Ananth Venkat with us. So Ananth, tell us about the Global Industries Group. So you head that business for Standard Chartered Bank. How is India differentiated from other countries, and are we going to see many cross-border transactions in this particular space?
So, Nisha, first, the Global Industries Group, what does one do? It's an interesting name. So what we do is provide sector coverage across a number of sectors: TMT, oil and gas, metals and mining, consumer retail, etc. And my coverage does not include real estate, but as a bank we cover that sector well. And the intention is to bring ideas to our most important clients and try and create two things. One is the sort of environment for strategic transactions. And second is just elevating the conversation with the CEO, because it's very important as bankers we connect the dots across our footprint.
Yes.
What we are seeing in terms of deal environment, India, we are quite bullish on what we're seeing in the private equity space, right? So that's a huge area of focus as far as we're concerned. And we continue to follow the technology, IT services, consumer and industrial space. These are the space areas where I think there has been a lot of activity, and I think will continue. Globally, it varies from geography to geography. Middle East, for example, we are seeing activity around healthcare, around retail and consumer. In the US, there's a lot of activity around technology, around healthcare. Africa, interestingly, there's a play around healthcare, consumer, as well as telecom towers.
Right.
So it varies from geography to geography.
So when you're connecting the dots, and at your vantage position, you get a sense of what's really happening across the world in these sectors that you look at. So how is India positioned? Which are the sectors which are looking most active when it comes to Indian M&A space, and with which other geography are we expected to have more transactions, and why?
As I go around and meet clients in different countries, ranging from China to the US, there is a huge amount of interest. That's the first point, right? I think everybody recognizes that this economy is growing. There's a huge consumer base, the GDP is growing, and the regulatory environment is much more conducive to doing deals. That's the first comment I'd make. In terms of sectors where people are seeing interest, I would say for sure in the technology space, there is continued interest. On the healthcare pharma side, there continues to be interest, including the consumer side. On the industrial side as well, there continues to be a lot of interest. When I look at sectors like oil and gas, metals, mining, it's more outbound than inbound. And the other area, interestingly, is financial services. That's also a big area. And private equity interest, there's interest in insurance, there's interest in banking and non-bank finance companies as well. We saw a recent deal announced, though it hasn't been approved, and I think might have fallen off, which is Fairfax investing in Catholic Syrian Bank, for example. Right?
Yes.
There was a 51% stake approved. But it's deals like that, and there are people, investors, both strategic and financial, who are very, very keen on the financial services space.
So we've seen fair amount of interest coming in from Canada-based funds in the recent times. But which are the other geographies which are looking very, very proactive at this point to invest more in India?
Singapore continues to be interested between Temasek, GSE. That's been, they know the economy, the country extremely well. They've been here for many years. And then it's the Middle East. You have ADIA, the Abu Dhabi government, who's interested. And they're exploring opportunities. I know many deals have not been announced from there, but I can tell you that there's a lot of active dialogue and conversation happening. So don't be surprised if 2017 second half and 2018 you see inflow from there.
All right. And what do you have to say about the Indian promoters, the Indian companies? Of course, capital investment really hasn't picked up in the private space, and we are waiting for that. But what about the big checks and the ability to write big checks and buy out big companies overseas? Is that trend back? Will it take time? How are you seeing it from your perspective right now?
I think on the outbound acquisition side, just based on experience, there will be more caution than before. And where it does happen, I think it will be selective. Now, there are areas where there is a need for acquisitions. For example, take the national interest, energy, oil and gas, ONGC. They will continue to explore opportunities, and that's a strategic sort of priority for the country. Beyond that, I think you will see the technology sector also seeing seeking opportunities outside. I don't know if they'll write big checks. They've never written big checks, right? And then the pharmaceutical sector. Those are the areas where I see more outbound activity.
All right. So IT, that's very interesting because the shareholders are asking the companies to utilize their cash in some form and maybe big acquisitions. But you're saying that not many are very upbeat about big acquisitions.
You know, I followed the sector very closely, so I can tell you, and we've been involved in many, many discussions with the largest companies in the sector. Not doing a deal is also good. And I would say that when we looked at some of these targets, and we've seen many companies in the heyday of the boom, you know, companies like Cyient, Viant, Sapient, none of them exist, you know, or have been merged into other companies. They were targets. They were worth, you know, several $100 million or over $1 billion. And ultimately, it was proven that they really were not value accretive, right? And I can tell you every Indian IT services company looked at these opportunities and stayed away. So in retrospect, I think having that caution is probably a good thing. It's not that they haven't done deals. They have. Take HCL, take Wipro, take, you know, TCS. They have done deals, but they've been more selective in what they've done.
I like the conservative approach that you have taken. I hope you'll not be ostracized from your community. Not doing a deal is also a good thing at times. But we all agree to that. The senseless deal, a meaningless deal has always led the company's downfall also, as much as a deal has really catapulted a company. We've seen that in the recent past as well. All right, so stay on with us and we will talk more about deal making and what is, in your view, one of good recent deals. We'll talk about that as well. Stay tuned to Big Deal.